Hello guys, welcome back to my channel once again. Today in today's video I'm going to be revealing to you the secrets of regular divergence. The secrets, okay, how you can trade regular divergence on boom and crash, synthetic indices generally, and in forex generally. And then I'm going to be showing you how it plays out. And of course I made a video last time where I did a kind of introductory video to that series, and I also made a promise that I'm going to be revealing the secrets on how to trade regular divergence, and then that I will also make videos on the different indicators that you can use to trade regular divergence profitably. I'm going to make up to like 3 or 4 videos in that series, and believe me, trading regular divergence can be so rewarding. Now, this is CN on the screen, and you are watching CN Great Counsels and Forex Trade. All you need to do is to subscribe to this channel and turn on the notification bell. That way, whenever I upload a new video in whatever series, you get notified and you watch the video for your own benefit. And if you're an old subscriber, please, I'd like you to hit that like button, give this video a thumbs up, like, and don't forget to also share whatever video you found useful on this channel with other traders outside there, so that we'll get in touch with other traders and of course get in touch to larger audience. Okay, now I want to quickly start by telling you that most indicators are lagging, okay, meaning that they follow price behind. Okay, most indicators that we use to trade, they're lagging and they follow price behind, and that means that when price makes a move, okay, for instance, when price moves down, they also move down with price, and when price moves up, they also move up with price. Okay, however, sometimes, now take note of what I'm about to say now. However, sometimes there exists a kind of unusual discrepancy, unusual disagreement between price and the indicators. Okay, don't worry, I'm going to show you what I mean. Sometimes there exists a kind of disagreement, meaning that price may be going up while the indicators, the oscillators that we use, for instance RSI or some oscillators and the rest of the oscillators or indicators that we use, okay, we place on our chart, we plot on our chart to like trade. Sometimes there exists a kind of discrepancy, disagreement between price movement. This is what I mean by price movement. Okay, the up and down movements of the candles you're seeing, that's price movement, and this is the oscillator or indicator. Okay, so sometimes there exists a kind of discrepancy, disagreement between the price, the way the price move. In other words, there can be a kind of opposite directional movement whereby price might be moving up and then the indicator will decide to move down. So this unusual discrepancy is what we call divergence. Okay, this unusual discrepancy is what we call divergence. Okay, and I've made series of videos already on hidden divergence, and I made the promise in the last video that I'm going to be including an element of hidden divergence in the series of videos. In other words, I'm going to be telling you the secrets, what you need to be whenever you spot hidden divergence, and what you need to be whenever you spot a regular divergence. Now, regular or hidden divergence, they don't always play out, which is why I told you that normally the indicators and the price movement, they move along, so that when price moves up, the indicator moves up. When price moves down, the indicator moves down. Okay, but whenever there is this disagreement between price and the oscillators, that's what we call divergence. Now, I'm not going to be talking much about hidden divergence. We're going to be talking about regular divergence. Okay, and we have 2 types of regular divergence. We have bearish regular divergence and bullish regular divergence. Okay, now characterized by, higher high prices and lower low indicator in an uptrend, and of course lower low prices and higher high indicator in a downtrend. That is for regular divergence. Okay, now regular divergence can be looked at, okay, as a leading indication, as it gives you opportunity to sell at a high point and buy at low point, since it signals price reversal. So I did say that regular divergence is for trading price reversal, when price has reached a particular either low point or high point, and there is a potential reversal. That is where you begin to see regular divergence, where the price and the indicator you are using, they are making different opposite directional movement. Now we're going to be starting with regular bearish divergence. Okay, the regular bearish divergence appears in an uptrend where the price is making a series of higher highs, and then the indicator is making a series of lower high. Okay, now all these, they don't play out all of the time. That's why I said in the last video, you need to train your eyes to spot whenever there is such move or whenever there's such discrepancy. Okay, now the regular divergence, okay, the bearish regular divergence, okay, this movement of price making higher high and then the indicator making a lower high is an indication of a market exhaustion and a possible sign of price reversal, or at least a short price correction. Mark what I'm saying, at least a short price correction or complete price reversal into the opposite direction. Okay, now while regular bullish divergence appears during a downtrend where the price is making lower low, that is series of lower lows, but then the oscillator is recording series of higher low. Please don't get confused. Okay, now this movement now suggests a possible market reversal or a short-term price correction. So how do you then trade it? In other words, let me just quickly tell you what you obey. Okay, now whenever you spot regular divergence, either bullish or bearish, what you obey, this is one of the secrets. Now what you obey is the indicator's signal. The signal given to you by the indicator is what you obey when you spot a regular divergence. But for hidden divergence, you obey what price is telling you whenever you spot a hidden divergence. Remember that hidden divergence signals price movement continuation, so in the same direction, at least for a while. That's why I said you obey what price is telling you for hidden divergence, but for regular divergence you obey what the indicator is telling you. I'm going to show you example just in this video. Okay, I'm going to show you example. Remember I said it doesn't always play out, but you need to train your eyes. And of course I told you during last time that when combined with basic price action, not of course I'm going to be telling you some of the secrets that divergences hangs on. Okay, in this video, right, I'm going to be telling you. But then trading divergence can be so powerful and highly rewarding. Okay, and I also told you guys that you don't use all the indicators to trade divergences. You don't use all the indicators to trade divergences. And I also say that even the best one that are used to trade divergences, they don't just pick divergences automatically for you. You need to train your eyes to know and to pick them to see that divergence has actually developed. Okay, now before I show you some of the places I picked out where regular divergences played out, I'm going to be telling you the 4 good secrets you need to know when you want to trade regular divergence? Number one, you have to understand that it works with support and resistance. Now, if a regular divergence is playing out on a support or a resistance level or zone, an area of struggle, then you have higher probability that it will play out fine. Okay. Secondly, to buttress on that, whenever you spot a regular divergence and it's playing out on a support or is an assumed support, you have to back test. Maybe you place your horizontal line and then you move to your left a bit to see if that area that the divergence is playing out is a verified support or resistance level, and then you have higher probability. Okay. Now, secondly, you have to trade regular divergence based on the time frame that it's playing out. Okay. You can actually spot regular divergence in all of the time frames. Okay. Now, this is one of the examples I'm going to show you. I'm going to explain this now, but then it's better on higher time frames. Okay. Now, I'm going to do a video where I will tell you the best time frames to trade regular divergence. Okay. But just know that it is better to trade regular divergence on the very time frame it is playing out. This is because regular divergence might be playing out on a particular time frame, yet it's not playing out on the next time frame, either below or above it. Hence the need for you to trade regular divergence on the very time frame that it is playing out. That is secret number 2. Then secret number 3 is what I've said earlier, but let me repeat it here. You have to respect the indicator for regular divergence. Whenever you spot regular divergence, I'm going to show you that you respect what the indicator is telling you. Now let me quickly buttress. Let me quickly show you this. Now you see this place now. This is a powerful bearish regular divergence, and it played out here on this is step index pair, and it played out on M15. Now you discover that from here, okay, just take a look at the correspondence down. You discover that there was actually a price reversal, okay, and then you have bearish move to this point. Now this is where the divergence played out. You discover that from here to here, price actually made higher high, okay, but indicator is telling you what? Lower high. Hope you can see that. Lower high, higher high, okay, higher high, and then lower high. I hope you can see that. Now what happened next? Boom, price went down. That's why I said you obey what the indicator is telling you, because the indicator is telling you that price is going to be making lower high, and see how it played out. Boom, from here the market came down bearish to this point. That's why I said you obey what the indicator is telling you when you want to trade regular divergence. Okay, that is secret number 3. And secret number 4, you have to take your short-term trade as soon as the first move begins. Now sometimes, ideally you are supposed to wait for a retest. When the price makes the first move, this is what I mean by first move. But sometimes the first move never comes back to retest. It moves completely down or up, depending on whether you are trading bullish regular divergence or bearish regular divergence. But if you have the equity to hold, it is better and far better to take a sniper entry as soon as the first move begins. And you see the first move began here and it never came back to retest. Normally, if you were to retest, you would have drawn a trend line, so that after the retest, if this trend line is not broken, if the trend line is broken and price continue to move up, you know that the whole structure has been bastardized. You know that it has failed, and if it retests and comes back, that is when you're supposed to enter ideally. But then I said, if you have the equity to hold, it's better to enter your trade just at the beginning of the first move, and then you place your stop loss above. This is actually a bearish regular divergence. Okay, now the opposite is the case for regular bullish divergence. So those are the 4 major secrets on how you can trade the regular divergence. Now, I did say that you take your short-term trade, okay, as soon as the first move begins, especially if you have the equity to hold, or you wait, that is alternatively for a retest whereby you draw a trend line. For instance, if it were to be this, okay, if you were to meet the market maybe somewhere here where you spotted the divergence, and then this move started, you would have placed your trade. That is the first option, and then you place your stop loss above, and then you ride the trade. But then if you want to trade the other option of waiting for a retest, you would have drawn a trend line here. But you see, the retest actually came, but then it didn't get to retest on the trend line. Okay, the retest came after a long time. That's why I said as soon as the first move began. Now, if you had taken a trade till this point, it would have been huge. And then the market actually tried to retest, but it didn't get to that point. It still continued bearish. Okay, so that's another secret that you need to know. Now let's quickly check on some pairs. Like I said, it doesn't always play out, but whenever it plays out, it's always profitable. Now let's still back test. I think I spotted another place where it played out, still on the step index pair. Okay, yes, still bearish regular divergence. Now I spotted this. Let me quickly delete this and pick. Yes, now you discover that it happened here. Price was on a bullish move from here, okay, and then it got to this point, it came down and then made another high, so that this becomes higher than this. But then take a look at the correspondence. What happened? Okay, the indicator rather recorded lower high. Okay, so let me write again. This is lower high. This was a high, but this high is lower. That is lower, yes, lower than this. Okay, I hope you got that. Okay, that's just it. Now price recorded, this is a high, higher than this place. This was a high, this was a high, this high is higher than this, and then this high is higher than this one. So you have higher high. Why? The indicator recorded the opposite. And I said you do what? You obey the indicator. Look at what later happened. Boom, and this came down. Now it also tried to retest. Okay, but if you were to draw trend line, the trend line would have been somewhere here, so that even when it came to retest, it still went down big time. Okay, so that's just how you trade, you spot the regular divergence. Now let's check another pair. Let's check this. I spotted something that played out here. Okay, and it played out well, fine on M5. Remember I said you can actually spot regular divergence on any time frame, but it's more reliable on higher time frame. Okay, but then you must have a relatively good equity to trade divergences on higher time frame. If not, just look for them on lower time frame where you can take short trades and for a while. Now you remember I told you that you trade it according to the time frame that it is playing out. Now it played out here on M5 on volatility 10 index. Okay, now look at it. From this point, price was making higher high. Okay, but look at the correspondent indicator signal. What happened? Look at it. The indicator rather made what? lower, okay? And I said you are going to obey the indicator. What happened now? Boom. Now remember I said you take your trade at the beginning of the first move of the market, okay? That is your first option. And alternatively, you can place a trend line to see if the market will retest. But you see, before the market started this retesting now, it was already a long time, several hours, okay? Then that's why I said you can take your trade at the first move of the price, and if you want to exit, you exit. If you want to lock up your profit, you lock up your profit while you are waiting for a retest. And sometimes the retest never comes, okay? So that's how you trade it, okay? Now let's check if we can spot any on boom. Okay, yeah, let's just make do with what we have already, because the video is getting long. But then please, if you are new on this channel, I'd like you to hit that subscribe button, turn on the notification bell. That way whenever we upload a new video, you'll be the first to watch it. Don't forget also that I still have more video that's coming up in this series, okay? So a quick recap of the secrets, the 4 secrets that I've told you on how you can trade profitably regular divergence. I said number 1, that it works with support and resistance zone or resistance level. Now let's quickly check on that pair that I just showed you on it played out here. Now let's see if this place is actually a verified support and or resistance level. Now let's go back a bit. What can you see? It's a kind of, let's go to higher time frame to see. Okay, yes, it's actually a verified. Look at it, look at it. Okay, it's actually a verified resistance zone. Okay, yes, that's exactly what I mean. Now second secret is that you should trade it based on the time frame it's playing out, okay? As it may not be, there may not be a kind of alignment in several time frames. So you trade regular divergence on the based on this time frame that it's playing out, okay? And when you have a kind of alignment in several time frames, then it's even better that way, okay? Now thirdly, you have to respect the indicator for your regular divergence. You want to trade regular divergence, you are respecting what the indicator is telling you. And of course I've shown you that already. And the last secret is that you take your short trade as soon as the first move of price begins, or alternatively, that is especially if you have the equity to hold, but alternatively you are going to wait for a retest. But remember I said that sometimes the retest never happens. That's why if you have the equity to hold, you can take advantage of the first move of price. And then don't forget that you don't have to stay forever on the chart, okay? When you take the first move and it goes your way, you can either lock up your profit, or you take your profit after the first move, where even if the market comes back to retest before it will go long term in that direction, fine, okay? If it comes back, fine. If it doesn't, you would have taken your profit, you lock your profit, and then you are good to go. So many thanks for watching this video, guys, and I'm gonna be talking to you in my next video. Please don't forget that I am still going to release my last VIP strategy for the year. And of course the year is pure already for many, and it's still gonna be pure for many. This is CN Great Councils signing out for today. Bye.